Today, we're going to take a look at the latest news concerning Nvidia and take a look at some semiconductor ETFs. So, Nvidia had their earnings on August 28th, and it was highly anticipated. From their recent earnings beat to what's going on with the stock price, we're going to break it all down into easy to understand terms. So, let's get into it. Nvidia recently had their earnings report that beat expectations when it comes to both earnings per share and revenue. Earnings per share is a key indicator of a company's profitability. Nvidia exceeded what analysts predicted, which is generally a good sign. Revenue also came in higher than expected, which shows that Nvidia is continuing to grow and sell more of its products and services. But despite these strong numbers, investors seem to have been less enthusiastic about Nvidia than before. Now, let's take a quick look at the stock price. So, I'm filming this on August 29th, and the stock price is currently down 6.38% to 179 to $117.59. On the week, the stock is down 6.64%. Over the last year, it's up 141%. So, why this lukewarm response when it comes to Nvidia? The difference between Nvidia's reported numbers and analysts' expectations is becoming narrower. This suggests that while Nvidia is still growing, the rate of growth may be slowing. I loved Larry Jones' analogy that he used in a live stream on Wednesday night, where he said that NVIDIA has beat expectations. For example, imagine it was a race. They would have beat the world record, but they used to beat it by, say, 10 seconds, and this time around, they only beat it by one or two. So, overall, is the growth over for NVIDIA? I say no. So, I'm not giving any financial advice, just sharing what I research and what I invest in over here. And NVIDIA remains a dominant leader in the market, especially when it comes to segments like gaming and artificial intelligence. However, the numbers are showing us that future growth may not be as rapid as it has been in the past. But I'm okay with that. And I have continued over the last few weeks to add NVIDIA into my portfolio. I was able to catch it at some lower price points from about $94 to $103. So it seems like in the minds of the investors, they kept moving the bar higher and higher because this company has consistently beat expectations. So over time, and because of the demand, it's going to be harder and harder to continue to exceed the expectations by large margins, which might explain why, after reporting a beat when it comes to both earnings per share and revenue, we have a current stock price that is down. But I am looking at the big picture here. I am a long term investor and is still an innovator and a leader in key tech sectors, which means I'm looking for them to continue to grow and dominate in this field. And moderate growth may be more sustainable in the long run. Just because the company is a little bit more mature and stable is no indication to me that there is not going to continue to be positive growth for someone like me, as I said, a long term investor. Let me know your thoughts. Is NVIDIA going to continue to be a powerhouse in the tech sector, particularly when it comes to things like GPUs for gaming, as well as AI, of course? So, even with the current stock price pulling back a little bit, analyst ratings are still with an average price of about $156. Citibank is giving a target of 150, Bank of America 165, Wells Fargo also 165, just to name a few. When it comes to Nvidia, I believe in their long-term potential. They're not a hype stock. And current news, short-term setbacks are not impacting my long-term vision for the company. Okay, so now I want to take a look at some ETFs that are going to be options for you to get exposure to the semiconductor industry. Some will be very heavily weighted in NVIDIA. So, what is an ETF? It's an exchange traded fund. It is a basket of stocks. And the ones that we are going to look at, as I said, give you exposure to the semiconductor top stocks right now. So, an ETF offers investors the ease of getting exposure to this group of stocks, low cost, tax efficiency, and diversification. But when it comes to an exchange traded fund, you also have an expense ratio associated with it. And an expense ratio is basically an administration and operating costs associated with this type of managed fund. So, I do not personally invest into any semiconductor ETFs right now. My main ETFs that I have are VTI, VOO, which both have an expense ratio of 0.03. I have SCHD in my portfolio that has an expense ratio of 0.06, and SPHD, which has the highest expense ratio at 0.30%. The ones we're going to look at are all slightly higher. So, first up is XSD, and this is SPDR S&P 500 Semiconductor ETF. And of course, because these are all focused on semiconductor, they're going to be 100% technology. So this ETF gives you exposure to 39 different holdings, most heavily weighted in Credo and Semtech. It gives more exposure to mid cap and small cap semiconductor companies. It has an expense ratio of 0.35% and a dividend yield of about 0.36. The current stock price is $236.84, and it's up only 12.2% on the year. Next up, we have PSI, which is Invesco's semiconductor ETF, which gives exposure to 29 different holdings, most heavily weighted in Broadcom, followed by Nvidia. So this current stock price is $56.95. Over the last year, it's up 24.07%. And this follows an index that adjusts based on price momentum, earnings quality, and value. Its expense ratio is 0.56% and has a dividend yield of about 0.37%. So the higher expense ratio is probably due to it being a more actively managed ETF. And this fund is very concentrated in a few companies. Okay, next we're going to take a look at ticker symbol SOXX, which is iShares Semiconductor ETF. Also, a very small amount of holdings, just 30. Again, like the last fund that we looked at, most heavily weighted in Broadcom, followed by Nvidia and AMD, Advanced Micro Devices. So this fund has an expense ratio of 0.35%, a dividend yield of about 0.79%. And as we can see, it's heavily weighted in the larger semiconductor companies. It tends to be less volatile, offering more stability due to its focus on the more established companies. So this could be an option for those looking to invest into the leading semiconductor players. Current stock price $225.25 per share, slightly down on the day. Over the last year, it's up 33.87%. Next up, we're going to look at ticker symbol SMH, and this is the VanEck Semiconductor ETF. This fund has 27 different holdings, most heavily weighted in Nvidia. This one gives you 21.9% exposure to Nvidia. So definitely the most heavily weighted that we've looked at so far. Current stock price is $237.91, slightly down on the day. Over the last year, it's up 53.69%. It has an expense ratio of 0.35%, a dividend yield of about 0.72%. And as we saw, it focuses on a small set of the leading semiconductor companies. So it's focused on leveraging the potential growth of these major players emerging in the tech areas like AI and 5G. So I just wanted to share some ETFs that can give you this type of exposure. I do have Nvidia in my portfolio and in one of my IRAs, as well as my taxable account over on Webull. But I like to keep my individual stocks to a minimum. I am interested in other tech companies like Broadcom and AMD, but I'm not quick to add a lot of individual stocks into my portfolio. So I just wanted to highlight some ETFs that can give you exposure, as well as highlight some points like the dividends for those of you that are more income focused investors. So do your own research, but as we could see, XXD offers broad diversification, while SOXX and SMH are more stable with the high exposure to those top industry leaders, while PSI has a more actively managed approach, which may be something that suits your investment strategy. For now, in my portfolio, I will continue to dollar cost average into NVIDIA. I will definitely be keeping my eyes open as we go into September and October, where there could be lots of volatility and potentials for me to continue to build out my position. Growth for NVIDIA may have slowed down, but remember, slow and steady wins the race. I'm staying focused and taking it one step at a time and have a long term vision on companies like this that I'm going to have in my portfolio for years to come. Hope you enjoyed this video. If you did, make sure to like, subscribe, hit the notification bell. Check out my referral links for Moomoo and Weeble. They will be pinned in the comments as well as in the description. Let's keep learning. Let's keep being consistent with building up our portfolios. And of course, let's keep our money working for us. Thanks for watching. Okay, bye.